I interview people that teach how to do this, but basically I always tell people, here's the test. Go difference between being self-employed and being a business owner. You want to know what you are? Go to McDonald's and say, hey, I'd like to speak to the owner. Never there. Yet the business is opening, closing, stuff is happening. You have to be there. You're not in business, you're self-employed, right?
You created a job for yourself.
Nobody wants a job. They want a business that works without them.
Welcome, badass entrepreneurs. It's time to hear the world's movers, shakers, and difference makers spill their secrets for unlimited success. So strap in, for Badass Entrepreneurs Only begins now. Greetings, badass entrepreneurs. I am Coach Dan, and this is another episode of For Badass Entrepreneurs Only. You know the rules. You gotta be badass to listen to this podcast. If you're just a dip the toe into the water kind of person, you're listening to the wrong show. We're gonna charge and challenge you. We're gonna ask you to consider ideas that you haven't before. We're going to challenge what you believe is possible and impossible in your life. And here to help me do that is Curtis May. Curtis is the creator and owner of Practical Wealth Advisors and the host of the Practical Wealth Show podcast. And his focus is on financial planning and to help families become financially free by following the principles of wealth creation that have endured for centuries around the world. Curtis May, welcome for Badass Entrepreneurs Only.
Dan, thanks for having me. I hope to live up, and I hope I'm a badass, and I hope you badass on the show. So thank you.
For those who are listening and not watching, Curtis honored the show by wearing a hashtag badass t-shirt. I love it. So something in your bio was really interesting to me. And you said that you're following the principles of wealth creation that have endured for centuries around the world. So this is wealth creation before money. Do I have that right? Okay.
Yeah.
So what does that mean?
So what happens is people think like wealth management is investing, is putting money in the stock market. So
Yeah.
I teach something called principles-based financial planning, but a principle, what is a principle is just a way of doing things, right? So if the original principles-based planning comes from, for example, not the original, but here's a book that y'all may have read, The Richest Man in Babylon, right?
Mm-hmm.
So the 7 cures for a lean purse, chapter 2, right? Part of all you earn is yours to keep. Budget your expenses, make your goal multiply, make of your house a profitable investment, guard your treasure from loss, ensure future income, increase thy ability to earn. That doesn't matter. So it doesn't matter whether it's a fund, it's just, this is a philosophy about how you handle money. So Jim Rohn he used to say, most people have a money problem, they have a philosophy problem. And so, what you got to do is work on your philosophy about when money hits your account. What we have been trained to do is by Wall Street is that their basic message is you're not smart enough. You don't have the time. They're trained to manage your own money. So basically give your money to us. Okay.
Right.
And I'm going to tell you, because your audience, that is it's horrible advice, period, but it's definitely advice for entrepreneurs.
Right.
Because that's designed for employees that don't think, for cash earners that don't know how to make money. But your listeners, if you're a best entrepreneur, you literally know how to make money. You're what I call cash creators, right?
Right.
So you don't need to give your money to some fund manager you never met 1,000 miles away for 30 years, 20 years, and not be able to touch it. Your number one asset is you, right? And that's your mindset, your skill set, and your network. And then your number one investment is the business.
Yeah. So from what I hear you saying, Curtis, we are incentivized to not trust ourselves. Is that what you're saying?
Yeah, I am. That's exactly what I'm saying. And
Wow.
2 + 2 is 4.
Yeah.
And, those people don't know what the hell they're talking about. That's what I'm saying.
It'd be like buying a really nice car and then the car salesperson saying, okay, look, you are not a good driver. So you need to hire somebody to drive your car. Right. And then culturally, that's what we do. Like, oh, you can't drive your own car. You need a professional. And so,
what's Hitler's propaganda person? A lie told long enough over and over again becomes the truth. It does.
Yeah.
Right. And so we've heard that for the last 40 years. I mean, 401ks have only been around since 1979. It's
Mm,
not so people did stuff with money before 401ks.
yeah. So the overarching message from what I hear you saying is you can't be trusted with your own money.
You My message is you can be trusted with your
Right,
own.
right, right. But what we're getting from the
The
outside.
overall message, yes, is that you can't be trusted. You don't. I used to do a presentation back with one of my original companies, and the presentation literally was called "How Money Works." It was about mutual funds, and it literally said you don't have the time, the temperament, or the training to basically handle your own money. So you want to give it to us, where you'll get professional management, diversification, and liquidity. And
Wow.
so many words, give your money out. That was the first like 2 pages of the talk.
So people would sit in that talk and agree with that. Is that what you're saying?
You're too stupid to manage your own money. Yes.
And so, if these principles have been around for, as you say, centuries, why are people still so messed up with money? How come we haven't learned?
Because nobody teaches it.
Mm,
Basically. I mean, so one of the things that we talk about, Dan, is the four rules, and nobody's incentive to teach it. So like
sure.
I'm a financial educator at
Mhm.
I help people implement, but really I always tell people, look, is your money is not my money. It's I'm the guide. So, we're going to have a conversation. But if you read things like Richest Man in Babylon or Laurel Langmeyer or, people like that, Kim Butler, that will teach you money, how to think.
Mm,
Uh, because what happens is because there's a different school of thought. So there's two schools of thought when it comes to money. And there is built up by the four rules of the financial institution. So when any financial conversation that you hear, all financial products, and by the way, there's no product in of itself, no fund, no insurance policy, no nothing that in of itself is going to take you to glory financially. Okay. At
right.
all. Okay. Somebody's telling you that you got to run. This is the best
Mm,
thing and all your problems will be solved. That's nonsense.
yeah.
And so what the four rules are, they want your money. So if you were a financial institution, Dan, let's role play. So you're creating your fund or your bank, right? So
Right.
you want me to deposit my money in your account. So the first thing
Yes.
you do is incent me, give me a toast or whatever to put money in your bank.
Yeah.
And how often do you want it?
As often as possible.
Often as possible, like every time I get paid, right?
Right. Yeah.
And how long? So direct deposit, right? So how long do you want me to keep it there?
For the rest of your life.
Rest of my life. And then when do you want me to give it back? Never or as slow as possible.
As slow as possible. I
As
want
slow-
to give you as little money back as I possibly can.
So now all financial products are built with those four rules in mind by every industry that builds financial stuff,
Uh
right?
huh.
So I'm not throwing them under the bus. See, that's why you got to have your own plan, right? So
Okay.
your plan, our plan, or the clients that work with me, their goal is work optional income. They want cash flow. They want to be able to live like they want to live from the
Hmm.
income from their personally invested resources, right? So
Okay.
but their goal is to keep your money for the rest of your life. So you see that they're not work. Their goal is not make you rich. Their
Right.
goal is not make you financially free. So you gotta you need financial products, but you gotta make them work the way you want to work. But you got to start with the end in mind. I want passive income, great expenses, because that's not their objective. And see, so what you because there's two schools of thought when it comes to money. One is what I call the accumulation theory. So what
Hmm.
I showed you are based on that. So if you're hearing a lot of the popular financial entertainers that taught to basically the middle class and employees, what do they teach you? Buy and hold, dollar cost average.
Yep.
Every time you for a set amount or a mutual fund, sometimes the price is up, sometimes the price is down, or average a higher amount. They teach you things like max out your 401k. Okay. You're in it for the long haul, get a diversified portfolio of mutual funds, get out of debt, including your mortgage, buy term investor difference.
Okay, so but I'm listening to this right now, right? I'm listening to this podcast and I'm going, yeah, but people have been doing this for a long time. What's wrong with that? What's the
Well,
problem?
the problem is when you look at the results of that, the average 60-year-old has less than $150,000 in their 401k?
Hmm.
So, this has been around
Right.
for like 40 years. So, most people are in debt, 20,
Yeah.
25, 30% of the money are in debt. They can't pay their bills. They're living paycheck to paycheck. So this strategy has flaws in it. Okay. It's not working. Right. And so if
Right.
you study things like, so, and y'all see it, you're just not paying attention. So hopefully I can just let you see it. So if you
Mm-hmm.
read like what's the guy, the Millionaire Next Door.
Okay.
Okay. So in the book, he surveyed these millionaires, and Thomas Stanley says, well, how much credit do you give your stockbroker, which you would call wealth manager, credit for helping you be a millionaire? You know what the
Mm-hmm.
number is? It's like 11%,
Wow.
right? So how did they get there? So if you successfully clues, so when you break apart the Forbes 400, what
Mm-hmm.
is they look at the stats. So what do they do? They build businesses and they buy real estate, right? And so the four asset classes are business, real estate, paper, uh, which could be stocks, but it's also private lending, it's tax liens, it's they buy notes, uh, uh, and commodities, oil and gas, gold and silver. So when you
Yeah.
break, right, so they do different stuff, and then they teach what I call corporate finance or the velocity method. Here's their philosophy.
Mm-hmm.
They focus on velocity of money, which is the economic principle of moving money. So, for example, if y'all guys ever watch Shark Tank, Mr. Wonderful always wants to know, hey, if I give you this $500,000 to put into your deal, what does he want to know? How soon am I getting my money back?
Right.
So now, is that deal still going on? Yes. Is it still throwing off equity and cash flow? Yes. But now, what is his risk? Nothing, because he's got all his capital back. So he can do what? Put it in something else. And then he gets
Right.
it back. Put it in some, that's velocity of money. Okay.
Okay.
And then the second thing they focus on is cash flow. They want to put a dollar out and they want it to come back every month, every quarter,
Mm-hmm.
back cash flow. Again, as your money's coming back, your risk goes down because you're getting back your capital.
Right.
Okay. Right. They focus on risk management. They never buy anything without insurance. Right. They focus on leverage. So, like Apple, they're not trying to get out of debt. See, if you had $1 million of debt and $1 million of cash, a corporation to them, that is a balance sheet neutral decision. Right.
Mm.
So if I can, so they're not trying to get out of debt, right? They're if I can my if I access the capital is the most important thing, because if I can make my money make more money than money costs me. See,
Right.
because yeah, if there's a difference between being in debt and having debt. They have debt, but they're strategically using leverage because of
Mm.
the tax advantages of other people's money. That's why in Rich Dad Poor Dad, the first lesson is rich people don't work for money.
Yeah.
Okay. They
Right.
don't work for earned income. They don't work for
Yeah.
W-2 income. They work for portfolio or passive income. And see, so I was at a lunch with Tom Wheelwright, and he was breaking down. He says, listen, this is around when Trump was like saying, well, I don't pay tax. That makes me smart. And
Yeah.
then Tom said, listen, if he's paying any taxes at all, he needs to fire his accountant, because there's absolutely no way he could be. Quote him. Okay.
Yeah.
And so we are playing the wrong game. As
Yeah.
entrepreneurs, you got to play a different game. So you want to play velocity, cash flow, leverage, and then I teach something called being your own banker, but they use permanent insurance strategies as a place to store their liquidity, right? And so here's what I found out, that those strategies, what I call the corporate finance strategies, work in personal finance, and they're
Mm.
safer. And so we teach that. So everybody listening to a call, whether you have a business or not, is in business. You have a personal economy, and
Sure.
you got to control your production and consumption as a family. But if you're in business, you've got two, because you got the real business and then you got your
Mm-hmm.
household. And so you have to think about your money differently, and you want control. So I just teach people, here's how it works. You're not 2 + 2 is 4.
Okay.
And let's because here's the thing.
Yeah.
There's more opportunity. See, most people are always chasing investments. They think the key to growing their money is investing, is to find better investments that pay a higher rate of return. But they
Mm-hmm.
stuff all this money where they can't touch it, which creates collateral damage. So what I teach is the opposite. There is actually more opportunity in minimizing your losses than is trying to pick winners. Most of us give most of our money away. I call them wealth transfers. A transfer is money you're losing unknowingly and unnecessarily. And so for business owners, that's like $5 to $7 million over your working lifetime of money through taxes, through how you pay for equipment, through how you
Hmm.
mortgages and qualified plans. So it's not just the money, it's the interest on the money, the opportunity cost. And nobody ever looks at that. And so what we
Oh,
do is we identify and try to, plug those holes, and then
okay.
we bring that million, $2, $3 million back to them.
Okay.
That's what
So
I that's a long,
like,
big
this is
mouth.
great. I mean, I love this. I love this. So for the person who's listening right now, and they're thinking, okay, great information, Curtis. What do I do with all of that? Like, what's a first actionable step?
Other than call me, I don't know. But no,
Oh, Curtis.
here. So we'll talk about that later. But
All
here's
right.
so
Sure.
here's the first rule of wealth. Part of all you earn is yours to keep. This is Riley, the richest man in Babylon. Okay. And so if you'll use, so I like throwing out books. So like a Profit First, like let's say you're in business. So Profit First is a good read, which is just the envelope system for business owners. So let's say, so here's what I do. Every check I get, I save at least 15% of every revenue that hits my business account. So I pay myself first, and I create a what I call a wealth capture account. Okay.
Okay. Hmm.
So you have to organize it based upon your budget. I know people that start with 5%. I have good margins, so I do 15 right off the top, right? So when money hits my account, boom, I have a separate account for capturing wealth. So I pay myself first, and I make that automatic. Or I actually do it manually, but if you have like recurring revenue, you need to pay yourself first, because
Okay.
what you've got to do is you got to build capital so that you can buy other assets. See, most people's goal is I'm going to get this business and I'm going to have this big exit plan and I'm going to sell the business and that's my
Yeah.
retirement. Okay, that's a good plan. You probably aren't building it right to do that. That's
What's the mistake that people are making then?
Well, they work in the business, right? And they don't have
Right.
right. So now I interview people that teach how to do this, but basically I always tell people, here's the test. So go difference between being self-employed and being a business owner, right?
Right.
So you want to know what you are, go to McDonald's and say, hey, I'd like to speak to the owner. Right.
Right.
Never there.
No.
Okay. Yet the business is opening, closing, stuff is happening. But if
Hmm.
you have to be there, you're not in business, you're self-employed, right? And so nobody
Yeah.
buy that.
Right. Right. You created a job for yourself.
Create a job. So nobody wants a job. They want a business that works without them. And so what you want to do, see, to me, you should look at your business. You should work on your business.
Right.
Like
Not
for
in
me
it.
today, after we record this, is a Friday. Friday is like work on day, and then the
Okay.
rest is work in the business day, making the donuts, right? Seeing clients and
Uh
that
huh.
kind of, and I work on marketing systems, so I can replace myself, right?
Got it.
And then
Hmm.
you might find that, okay, I don't need to sell it because I'm not doing any work anyway, so I might as well keep it,
Hmm.
right? And
Interesting. Yeah.
and so because here's what they do. I was in a meeting with in this group with business owners, and they're talking about selling a business. It was this financial advisor talking about succession plans. So most of your money's in the business, and now you sell the damn business to give it to a fund manager to
Hmm.
manage this $5 million exit and put it all in the stock market and put it all
Yeah.
at basically, in my opinion, speculating with all of it. And
Right.
it's a
Right.
complete disconnect.
Yeah.
And but you think these guys are smarter. You make more money than most of them. And so
Yeah.
you have to trust yourself. Because then what I say, the three rules of investing that keep me out of trouble, here are my rules. Invest in what I know
Hmm.
or invest in knowing. Okay.
Yeah.
Right.
Completely.
Invest in what I can control. What, can I influence the outcome of this?
Yeah.
Bring me cash flow. And my third rule is don't chase returns. See, so if I can't control the first two, then I'm doing it for fear of missing out, right? Or I'm doing it for just because everybody else is doing it, right? That
Right.
returns because you are hoping to hit a home run and you can't invest that way. So I invest in what I know, but I would say the first action step for people is listen, just carve out, say, look, part of all I earn is mine to keep. and then I'm going to pay myself. And I don't care right now. It's not. And I don't mean put it in your 401k. I mean save it.
Mm-hmm.
Savings account, checking account, high yield account as your first stop. And let me define safe: safe, liquid, accessible,
Mm-hmm.
guaranteed.
Okay.
Right. So if it doesn't fit that criteria, that's not where you store your liquidity. And I want 3 to 6 months of that. Really
Okay.
12 months, but 3 months of your emergency fund, everything above that. So that's an actionable step because, guys, most people don't give enough credence to liquidity, the power of having
Mm.
access to cash as business owners. And, COVID should have, woke y'all up that
Yeah.
you either need money because now there's precedent that somebody could come in and feel they can shut the economy down, and
Mm.
you're a real estate investor, tell your tenants they don't have to pay you or just
Right.
shut this or shut that down. So you need liquidity. We call it, Dan, getting to a position of FU, right? You need to
Okay.
be in a position so that
Yeah.
it can mess with you. So you need liquidity. And if you don't need it, then you have money for opportunities because if you're liquid, opportunities will find you.
Of course. So, uh, I mean, this is great. Let me ask you something. If somebody wants to work with you, and they should, first of all, how do they get in touch with you?
So they can go to practicalwealth.net. I'm so big on liquidity. I have a free report I'll give you all, which is if you text Be the Bank to 55444,
Hmm.
and it will send you a report on this because I'm a financial educator, so I'm big on reading.
Okay. So be the bank, all one word or different?
All one word, all
Okay.
caps,
Okay. Be the bank, all caps, one word
to 55444.
to 55444. Perfect. Okay.
And just go to
And
my channel. You can hear more about what I call the madness that is Curtis. So you
okay.
read on.
And so I would get, are you on LinkedIn?
I'm everywhere. So LinkedIn,
Okay.
Instagram,
Right.
Facebook to a lesser extent, and
Yeah.
iTunes. If you like audio,
Yeah. Yeah. So
that's
look, I mean, if you aren't connecting with Curtis May, it means you aren't trying. So,
you just search Curtis May. I'll
right.
take the website.
And so someone says, all right, I think I'm interested in working with Curtis. What's the first step? Like, what happens when they start working with you?
So the first step is we just have a conversation, right? So
Hmm.
really, I always tell people your financial plan precedes your business or your investing plan, right? So, and when I say your financial plan,
Okay.
what do you want and why? So I want to get to know you. What are you trying to do? Because see, people will ask me, what do you think about this? And I call them club questions. And so the analogy I use is if let's say you got a chance to go play in the Masters, right? Golf's
Yeah.
most prestigious event, and I got two things to give you, but you can only have one. I could give you the clubs of any of the best players on the tour, or Dan, I could touch you on the shoulder and give you their swing. Which one would you rather have?
Hmm. I want the best one.
Right. Oh, you want the swing, right?
Yeah.
Because
Right.
I listen. Tiger Woods could take a set of clubs out of the thrift store and beat 95% of people on the planet, right? So
Right. Yeah. Of course.
you need the club. I used to work at basketball camp. So listen, you gave me Jordan shoes. I couldn't take off from the foul line and dunk. So they ain't the shoes.
Right.
And so you want the swing. So I'm the swing coach. That's
Hmm.
the analogy. So people say, well, what do you think about growth funds? Should I
I
get
see.
a year mortgage or a 30? Should I get a Roth or a traditional? Those are club questions. They're just clubs. Companies are club manufacturers. So I am properly licensed to offer the clubs on the financial club rat, but it doesn't matter until we know where you are on the course and what club we need to get you from here to here. So
Hmm.
I'm the swing coach. So that's the plan. Where are you at? What do you want? Why? What we look at is, all right, so now what are you doing now? What's working? And once you tell me where you want to go, I'd like to be financially free by
Yeah.
XYZ. Okay. So now is what you're doing, dumping money into SEPs or solo 401ks or mutual funds that none of which are designed to generate cash flow. You're just focused on investing in capital gains. Now, I'm not saying not do that. What I want you to step back and say, okay, here's the things I'm doing. Here's where I'm at. This is position A, and I want to get here. It's like a GPS. So we do a financial.
Hmm.
And we say, all right, are these things, well, do they have the capability of getting me where I want to go? So that's
Yeah.
step one. So there's no sales, there's no product discussion. It's just like, where are you at now? Where do you want to go?
Yeah.
Let's get you there. That is, it
Okay.
start there, right? And then we can look at, and then it's more like, all right, now we're looking at if we decide to work together, then
Mm-hmm.
we're looking at plugging the holes. Like you have a leaky bucket, right?
Yeah.
We're coming in, you got opportunity costs, you got debt, you got taxes,
Mm-hmm.
and cash flow, or you commingle cash flow. So we need to fix that. We got to figure, because you're giving away most of your money.
Right.
Okay. And so we don't need to invest in nothing. We got to stop giving your damn money away. So we gotta, so what I do is I help people keep more of their money. And then once we find it, and we plug the transfers, then we'll pick the appropriate things that will help you get
Mm.
point A to point B. So
It sounds like people are under the illusion that they have to give their money away. Do I have that right?
yes,
Okay. And that is perpetuated. It's a victim or prisoner mentality, right? Four hots and a cot. Like that's all you get in your
right.
prison cell. And so what you're saying is you can do a jailbreak.
Jailbreak your money. Yes.
And right. It seems like it starts with really changing your thinking about your money, right?
It starts with that. I call it changing your mind about money. And you have to, which is really, because the investing and even being in business, and I know this, we talked about this when you came on my show,
Sure.
is investing is really about becoming.
Mm.
Right? So that's why I don't tell people what to invest in, because it's not my job to tell you who to become. Do you want to become a good business person? Do you want to become a real estate investor? Do you like notes or syndications? You have to research, you have to analyze it. You got to, and
Hmm.
see, that's where, see, people don't want to do that a lot of times. And so if you don't want to do that, then call Uncle Dave, call in, because the people that call me, their goal is work optional income. And then, I'm Yoda,
Hmm.
I'm the guide, right? You're Luke.
Yeah.
And so now you are aware the force exists, but now you got to learn how to wield the force. Okay. So you
Okay.
got to go.
I'm First of all, loving the Star Wars analogy. I could do that all day long. And look, this is tremendous information. Like you have given us all the tools that we need, well, not the tools, but just the ideas that we need to begin.
Yeah.
And so again, tell us how we can get in touch with you.
So go to practicalwealth.net, and then just, you can, somewhere in there's a button to have a call with us. Follow me. And what I was saying before, if you just want to read a little bit about this philosophy, we'll get on our,
Yeah.
if you text Be the Bank, all one word, all caps, to 55444, and we'll get
Hmm.
it out to you. And then I would suggest follow our YouTube channel, because what I talk about is, we teach people how to be the bank. I'm really big on cash flow management, just being in control of your money. Stop giving your money to other people, or finding somebody to give your money to. You want somebody that will teach you money, right?
Mm.
I tell people, look, it's your money, it ain't my money, right? And so I'm the guide, but because you're already smart, you're already running a business, but the skills are make it, keep it, grow it, right? So
Hmm.
I'm the keep it guy, how to keep
Hmm.
money made, right? The grow it guy too, but you're the make it guy. That's offense, right? You're the offense. You're a real estate investor. You're working with a coach. You got Coach Dan working with you and grow your sales. That's offense.
Hmm.
Curtis is defensive coordinator. I'm gonna make sure you keep it. I want to make sure you're protected. You've got proper insurance. You got asset protection. You got legacy planning. You're liquid. You know the difference between an asset and a liability. That's defense.
Mm.
Okay. That's what I do. We sort of walk you through to make sure that you've built a bulletproof foundation, so that you build a house on rock, with sand. Most people are building a house on sand because it's all based upon hypotheticals and markets going up or down. Not taking into effect inflation, future taxation, government
Hmm.
change. It doesn't affect it. It doesn't. Most typical plans they're all hypothetical and they work if
Yeah.
thing goes right.
Yeah.
Nothing ever goes right. Y'all in business, you gotta have a plan that works when it rains. You can't have a plan that
Right.
thunders out. So most good financial planning is not investing. It's really more preparation for, excuse the expression, shit happening,
Right.
for layoffs, for COVIDs, for rising prices internally, for, you've got to have a plan that where you're thinking about contingencies. And so what I try to do is prepare people for, because markets go up, markets go down, markets go sideways. Guess what? You got to win either way, and you can win
Yeah.
either way.
Curtis, this has been amazing. I mean, my head is so full of knowledge now. I mean, it's beyond the tipping point. My brain runneth over with
All right.
financial
Hope
knowledge.
I
I
wasn't
love
rambling.
this.
I get excited, guys. So
No,
just
I love it. You are, I mean, this is your badassness, brother. Like, this is the thing. You are so enthusiastic about this. And so, yes, please connect with Curtis. He's gonna, like, this is not a high pressure sales technique. This is our tactic, right? This is just knowledge. And if you want to move forward, that's what you'll do. If not, that's what you'll do.
in fact,
But
if you don't want to think and you just want to put your head in the sand and find your qualified plan, don't call me.
I
I'm
love
telling
it.
you, call me.
Okay.
Help you.
Well, again, man, thank you for being a part of For Badass Entrepreneurs Only. You are clearly badass and you helped my audience. And you who are listening now know so much more than you did at the beginning of this talk. I thank you. I bless you. And we'll call it to be continued. Be well, Curtis.
Yes, sir. Thank you.
Hey, one last thing. If you're feeling stuck in business life, wherever, download my book, Jumping the Gap, Kill Your Story and Take Action. In this book, you'll see how the stories that you tell yourself are stopping yourself from living your greatest life. Just text the word GAP, G-A-P, to this number, 213-409-8366. 213-409-8366, and text the word GAP. It's a short read, it's fun, it's easy. And if you hate reading like I do, you can grab the audiobook. It's at that same link. Just text the word GAP, G-A-P, 213-409-8366. You'll love it. All right, that's it. Go out there and be badass today.